All right, so welcome to our event on cross-border compliance and sales tax for Canadian companies selling goods and services into the US. I'm Will Booth from DNA Business Management Solutions, and I also have Kevin Anderson from Avalara on with me. Kevin, I'm going to make you the presenter.
All
So
right.
you can share your screen.
Perfect.
Okay, I see it. Excellent. So welcome everybody. As I said, we're recording today's session, so put any questions in your chat or in the Q&A. I'll be monitoring both and we'll answer them most likely at the end of the session. And today's session is based on some requests we've had for Canadian companies getting some info from some tax compliance experts at Avalara. So I'm happy to have Kevin Anderson from Avalara on the line with us. Kevin is a sales executive and at Avalara, and Avalara is a company that is a preferred Sage tax compliance solution provider. It has an integrated module called AvaTax that works with Sage 300, and they do a lot more than just tax compliance software. They offer services as well as they manage taxes for a lot of jurisdictions in the US. So they are experts in this field. Kevin's been working in tax compliance for 5 years, the last 4 at Avalara. And he and I have been working together for the last 3 years with Sage and Sage 300 clients. So with that, I will hand it over to you, Kevin, and to provide today's very interesting information session.
Yeah, thanks, Will. Real quick, I want to do just a quick function check. Am I coming through loud and clear?
Absolutely, you sound great.
Perfect. And then are we looking at the presentation version of my of the slide deck?
Yes, we are. I see.
All right, then we are good to go.
Yep.
So to dive into this one, Will, thank you for introducing me to the group, and thank you all for jumping on the line today. Look forward to being able to walk through today's information and make sure that I'm giving you guys some good information to shore up your business's compliance. Will really hit the nail on the head that here at Avalara, we are focused on becoming a transactional compliance partner, ensuring your guys' transactional compliance from beginning to end. And my traditional role is to work with businesses through exploring how cross-border calculations and automation, as well as sales and use tax automation, as well as VAT, really how Avalara can best assist your business in ensuring your compliance. And so that's the traditional role that I take on here today. We're going to go back one step and really just focus in on, let me pull up an agenda here. We're really going to focus in on cross-border compliance as well as sales and use tax compliance within the US. Both of those arenas have had some changes as of late. And so I want to make sure that I'm presenting up-to-date information for you and your team so that you guys can take that information and double check your business processes to ensure that you guys are maintaining compliance. If at any point you do have some questions, feel free to drop them into the chat. I'll also reiterate my contact information so that if you take all this information back to your team and you have some follow-up questions, happy to address those here after once this meeting is over. But for today, we'll start in cross-border compliance, run through some of the big gotchas that happen within that arena, and then we'll then move into U.S. sales and use tax compliance and some of the gotchas that pop up there. And kind of throughout this the scope of this conversation, I'm going to be giving you guys some key takeaways, and that's the information that you can, hopefully it's a nice little bite-sized nugget of information that you can take back to your team and double check your compliance. So to dive right in, we're going to start talking about HS codes, or harmonized system codes, and these are the codes that you would attach to any products that are being sold across country borders. So yes, in this scenario, kind of the default example that I'm going to be giving is selling from Canada into the US. This does apply to selling into any country outside of your home country. So in this case, most of the time, Canada into a different country. And in general, you know, I don't want to spend too much time on the definition of the HS code, but for the most part, every item that's being shipped across the state line will have to be identified as such by the receiving country. And so when you're looking at an HS code, we got these 6 digits up here, or the first international 6 digits. Those are uniform for any product being sold throughout the globe. And then the back 4 are going to be specific to the country that you're selling into. Now that's important because the country that's receiving wants to know exactly what you guys are selling so that they can apply the appropriate cross-border tariffs and determinations to it. Make sure that those are paid and remit to the as needed. And so with this, the international code is going to get you a pretty good estimate of what those tariffs and what those charges will be upon receipt. But then depending on the country that you're selling into, these national codes can get a little bit more specific. And so each country will have some form of unique code that they would apply to these to each transaction coming into their borders. And again, first 6 are universal. Now, mapping these codes is a pretty labor-intensive process if you're taking on in-house, and getting the accuracy there is very important. You want to know, the country wants to know exactly what you guys are selling within their borders, and so being able to determine that or provide that determination is going to allow for a specific calculation to be applied to that transaction. Very commonly, these 6 digits are good to go, and then these last 4 get left off. And without that specialized national code being applied, for example, if you're selling oranges into the the US may have an international code for citrus fruit, but then they could have a very specialized code for oranges. And if oranges are exempt from or have a lower tariff rate than citrus fruit, by default, without indicating that these are oranges, you will be charged for that higher citrus fruit tariff. Now, with that, the traditional ways that that this code mapping happens, so making sure that your entire product offering is correctly mapped so that when you're selling cross borders, it has that right at HS code applied, is done through carriers, brokers, consultants, lawyers, or you do it in-house. And there are some downsides to each of these different methods. Really, when it comes to carriers, we kind of walk through an example of only indicating citrus fruit, not the exact specific type of fruit that's being sold. Carriers will apply that international code, sometimes at a low cost or a very affordable cost, but they do not dive into the exact product that's being sold, and therefore you could be overcharging your customers. Custom brokers, lawyers, they will do this in-house. It usually comes with a pretty hefty fee. It's quite a few man hours, and so doing that manually, they're wanting to account for that. Very similar to if you're doing this all in-house, it is a lot of upkeep with the potential of error or defaulting to just the international code. And what I really want, this is going to be one of those key takeaways when it comes to mapping an HS code. They're very difficult to maintain. Things do change, codes change, especially with the national codes. Keeping up to date with that and 100% watertight on that front is a very tall ask. And not doing so or inaccurate HS codes can cost you time, money, and or customers. And so really wanting to zero in on the accuracy there is, again, going to lead to savings of time, money, and potentially irritated or non-returning customers. And that's where, if kind of walk through this one, this is just a little bit more detail around how these can affect your again, your time, money, and customers. If it's incorrect on the paperwork, everything can be held up, and that can create a headache for both you and your customer. If they're incorrectly calculated, too much or too little, again, either your customer's paying for that, you're paying for that that overcharging, or if it's too little, then you're having to rectify that with the state directly. And again, causing a headache either for you or your customer, and potentially costing you more money. And so if this is an arena that you do want to further explore, Avalara, again, wanted to make sure that we're just kind of getting facts out right now, where if HS codes is something that you guys haven't looked into in the past, something that you might want to, if this is something that you'd like to further explore, I'm happy to enter into that conversation with you. Avalara does have a pretty state-of-the-art way of addressing HS codes or classifying those HS codes. We use an automated system where we're actually able to take your product listing, run that through an automated engine to get the HS code, and then we verify everything with Tax Expert, and that way you do have everything that you need for your product offering and what countries you're shipping into. It is very affordable compared to that of the lawyers, brokers, or a third party, and also guaranteed accurate by Avalara. And so again, quick pitch on that. I just wanted to make sure that if HS codes are something that you guys are wanting to look into, because the inaccuracy there can lead to a very tangible cost for your business, then I'm happy to enter into further conversations with your team. Now, once you have that HS code, whether you're using one internally or using a third party or using a carrier, or you're using Avalara, you have that HS code. One of the biggest difficulties that businesses face is what to do with it. Who's going to pay that duty? And kind of we got two really basic options at this point. You know what you're selling. You know you're selling across borders. Either you can calculate those duty and import fees yourself, do those in-house, and present those to your customer, or you can have Avalara handle those for you and calculate those on your behalf. But more so, there's really two styles of getting the custom duties paid for. Now, duty at place or shipping DAP is where your customers will have to pay for those duties upon receipt. Now, this is a very common process for smaller businesses or businesses that do not have a shopping cart. They will conduct that sale. I'm sure there's been a couple scenarios that you guys have. I know I have one where I bought a shirt from the UK, and I thought that it was with the conversion rate, I thought that it was about $20. And then I had to go and rectify that with FedEx before they would complete the shipment to me, where there was a tariff of about, I think it ended up being about $8. Turns into a $28 shirt. Thought I was buying a $20 shirt. I just haven't, but I did have to rectify that with the carrier before receipt of the shirt, and it did cause a. I mean, so just speaking personally, I haven't used that shopping cart again. Having a surprise charge is never fun, as I'm sure everybody here can attest to. But that is where shipping duty at place is, again, where you would present the price for the goods and shipping, but exclude the duties and customs. The carrier would then be responsible for collecting those duties and customs from your customer before they receive their goods. It does satisfy. There's no incompliance there, but it is, again, frustrating for your customers. So kind of our second takeaway is that leaving the duties and customs to be paid by your customer does lead to a bad customer experience and can cost you return customers in the long run. The other option is shipping DDP, and I'm going to pull this guy up. This is a pretty big diagram, and we'll just walk through this so that I'm not just reading everything right off the screen. Effectively, shipping DDP is where your customers will pay for their duties up front. And so upon the completion of their invoice, that invoice will detail the cost of the goods, cost of shipping, and cost of the customs and duties. Your customer will then agree to that total price. Carrier will then ship it over to them at the customs agency. They will then have receipt that the duties have been already paid. That then allows them to ship locally to your customer, and they receive their goods without having to address any additional customs or duties. This is just as the world shifts towards the Microsoft, or sorry, the Amazon model of one click to check out, or making buying as easy as possible. This fits right in line with those trends, and does lead to the best customer experience for your team and the most return customers on an ongoing basis. All right. So again, just to kind of highlight those two key takeaways again. HHS codes are required on any shipments going outside of your home country, and they are difficult to maintain. Inaccuracies on that front can cost you some time, money, and customers. Once you have the HS codes, shipping without providing that calculation up front for your customers leads to a very bad customer experience, and can cost you return customers in the long run. There is an option for providing those custom and duty determinations within your shopping cart or in real time before completing that transaction if needed. If that is a conversation that you guys would like to get more information around, please feel free to submit a question or feel free to contact me after this call. And so that really is kind of the biggest updates when it comes to customs and duties. What I'd like to do is shift gears a little bit and dive into the world of sales tax within the US. And one of the big things, especially when talking about sales and use tax compliance for businesses outside of the US, is that there traditionally has been a bit of a disconnect if businesses outside of the US did not have a physical presence within the United States. And so a lot of our conversation today is going to focus on how that has changed, and how really compliance is getting more and more complex here in 2021. One of the big things is that states have added more tools to their toolbox to enforce compliance, especially for that of foreign companies outside of the U.S. Once that can of worms is open, the U.S. Or sales and use tax compliance within the U.S. is not straightforward. It's not logical. It is very difficult to maintain. And because of that difficulty, the cost for maintaining that compliance is skyrocketing. The other key piece is that it's not optional. Once an obligation with the state has been created to maintain sales tax compliance, your business is going to have to maintain that compliance at the risk of an audit with fines and penalties on an ongoing basis. As states get more and more interactive or more and more technologically advanced, finding businesses that are out of compliance is becoming easier and easier for them. And if the state reaches out to you, then you have to bear the full brunt of that bill, instead of volunteering to come forward or other remedial actions that may make that bill less or less. Now, why all this is coming up right now, sales tax in the US has been around for well over 100 years, is that the states have a couple new needs and a couple new tools. So the states, I'm sure nobody here's surprised if I say that 2020 was a very strange year, and quite frankly an unfortunate year for a lot of people. Um, and it also was a rough year for states as far as having to put forth funds and emergency reserves to fund some of the programs that were responding to the to the coronavirus and the COVID-19. And breaking into those reserves really taps into a need to replenish them. And one of the best ways that a state would be able to make up that delta is by increasing the things that they're taxing when it comes to sales tax, as well as increasing the number of businesses that have to file and remit sales tax with them. And for the states to be able to do that, they do have a new set of tools that will allow them to both tax more things and require sales tax from more businesses. And that's economic nexus. Economic nexus is where a state will require that a business maintain compliance within their borders, not based off of their physical presence, but rather off of the number of sales that you commit or that you ship into their states, and the gross revenue that you sell into their states. Now, with this, if each state that we're looking at up here, that's colored in kind of dark green, or I guess that's a green blue, each of these states is actively enforcing economic nexus laws. And so that means if you sell into any of these states and you cross a threshold of sales for them, the rule of thumb is $100,000 a year of sales or 200 shipments into their state. That then creates the obligation for your business to establish and maintain compliance with that state. So you need to register with the state. You then need to provide sales tax determinations on every transaction that goes into that state. And then you need to file and remit to that state on a regular basis. The state will tell you how frequently they want you to file and remit. Now, before we go into this, there are tools that the state also has for enforcing this across the international border. If you do have questions about that, I'm happy to dive into them. Once that obligation is created, then the state does have the right to collect those funds from you. And usually what comes up in these conversations, especially with businesses that I work with, is a comment that is somewhat along the lines of, well, we sell only to exempt customers, and so we don't have to deal with sales tax, even if we do sell over those thresholds. And that is a little bit of a misconception. So with selling to exempt customers or manufacturer, distributor, things of those natures, where sales tax is not oftentimes the forefront of your mind, there is still a requirement to maintain compliance. And that comes in the form of collecting and maintaining exemption certificates from those exempt customers. So as you're selling to these customers or to these exempt jobs, you do need to, if you've created an obligation in that state, you do need to collect an exemption certificate from that customer, and you need to have that on file so that if a auditor comes in to audit your business, you have that valid exemption certificate that exempts your transactions with that customer from sales and use tax compliance and determinations. Sorry, not compliance, determinations. The other piece is that, so really the focus of maintaining compliance if you sell wholly or to exempt customers is that it's from providing an accurate sales tax determination to your customer to proving why you didn't have to collect sales tax from them. And then the state will then also require that you file and remit with them a record of those transactions. Now, this is a little bit more of along the lines of just to kind of mark out how difficult collecting and maintaining exemption certificates can be, depending on the number of states that you're moving into. Now collecting and validating and keeping up to date all exemption certificates for those transactions can really turn into the number of customers that you sell to within those states. And managing, over 1,000 pieces of paper is no easy task. And making sure that each of those pieces of paper meets the state's requirements to be considered valid is, again, also not an easy task. But very critical to, in the case of an audit, those little pieces of paper actually count for real dollars that you could be held liable for. All right. And then once you have those pieces of paper, once you are maintaining compliance there, again, you will need to file and remit a report of all of those sales to the states on an ongoing basis. Usually it'd be once a quarter or twice a year. But taking one step back, really the biggest question that we're looking at here is if your business has created an obligation with any of these states, especially those enforcing economic nexus. And to help with that, Avalar does have a sales tax risk assessment where we would be able to conduct a formal review of your business activities over the last year, run those against any laws that a state has in place for creating nexus, and then we'd be able to provide you with a finalized copy of a report where we detail out every state that you've created an obligation in, what laws dictate that obligation, and then you'd be working with one of our CPAs to establish the best next steps to addressing that new obligation. And the one quick sales plug that I'll do here is that thank you guys for joining, and with you guys joining this webinar, happy to provide the risk assessment to you guys for half off. All right. Now, to quickly review, as we're jumping into here, here's my contact information if there are any follow-up questions or anything that you'd like further information on. I do want to reiterate the 5 key takeaways that we ran through here today, just to wrap everything up. So we did talk about how HHS codes are difficult to maintain, and if they're inaccurate, you guys are at risk of costing you time, money, and customers. Shipping without customs and duties applied to your customer's invoice can cost you repeat customers, or cause your customers to go with solutions that do give them the upfront bill all at once. Shifting gears to sales tax compliance is not optional. The states have new tools to enforce compliance, and selling to exempt customers doesn't mean you don't have Nexus, or doesn't mean you don't have to maintain compliance. It just means that your compliance activities look a little bit different. If you would like to further explore any of those topics, I'm happy to jump on a call or address an email, and my contact information is up here on the slide. But with that, I'd love to open up the chat for some question and answer, if there are any immediate questions that we can run through here today.
All right, Kevin, that's great. There is a couple of questions. Let me just go through them here. I may have to paraphrase. One is, are businesses with no U.S. locations subject to economic nexus?
My apologies. Well, could you repeat that?
Sure. Can you hear me all right?
I can. Yep.
Yeah. Okay. So they're asking, are businesses that aren't in the U.S., so no U.S. location, are they still subject to economic nexus, assumingly if they go into the U.S.?
Yeah, and that's the key. So no physical presence, but selling into the U.S. And if that business crosses the threshold of that state, so again, whether it be $100,000 or 200 shipments into the state, that does still create the obligation to establish and maintain compliance with that state. So you got to register with the state, and you got to start accounting for your activity there. And so to do so, or failure to do so, gets into a little bit of a bad situation where there's fines and penalties applied, and then the state will actually be able to put a lien on the business within Canada if it goes unreconciled for a period of time. And so there is still, again, kind of hitting back to that key takeaway that sales tax compliance is not optional. That is something that you're really wanting to double check or double ensure here as soon as possible, just to again, fortify your guys' compliance and eliminate any risks moving forward.
Right, because there is, at least some or all jurisdictions in the US, there's now an agreement between Canada and the US to share information about this
Yes.
kind of tax compliance, right? So it's not like you can hide because you're in Canada anymore, right? Whether it's personal or business. Yeah.
Yep.
Okay. The next question I have is, do Canadian businesses have to account for HS codes on shipments to the US?
Yes. Yep. Now, I will say there's a caveat there that from Canada down to the US, there is, I believe, a $200 per unit leeway. So
Okay.
if the total shipment costs less than $200, then there is you don't need to notate the exact HS code. But for any shipment that's over $200, you do need to have those applied.
Right.
And then vice versa from selling from the US into Canada. So if you do have a warehouse in the US that then ships up into Canada or something along those lines, that limit is only $10. And so it'll apply to a lot more of those shipments.
Okay. So if you're using like a freight forwarder or somebody to bring goods into Canada?
Yep.
Yeah. Okay. Even if it's not from your warehouse, if you're just, getting goods or fruits or vegetables or whatever sent into Canada, you still have it on the other direction too. Okay, cool. I have another one here. Are there any shopping carts or web providers that make cross-border calculations automatically? So I guess that like on e-commerce.
Yeah, yeah, that's a great question. And the short answer is not out of the box.
Okay.
And so, kind of the big ones that come into my ecosystem are Shopify,
Yeah.
Plus, Shopify, WooCommerce, and BigCommerce. Um,
We know Shopify, they're based here in Ottawa.
oh yeah, there you go. Well, so
And
with that,
WooCommerce and BigCommerce for sure. They're the big ones out there now. Yeah, I guess also Magento, now owned by
yeah,
Adobe. Those are kind of
yeah,
the key ones for sure.
yep. So with those, BigCommerce, WooCommerce, Shopify, they do not have this functionality built in. They do partner with Avalara to provide that functionality. So if that is
No.
something that you want, we can walk through what it looks like. We do have a pre-written integration, so that part of it is very smooth. With Magento, that you brought up, Magento does have the capability to build out. There, as I'm sure no news to anybody on the line. Magento is a little bit more customizable than the other shopping carts that we talked about.
Right.
Magento does have the ability to build that out, and it's a little bit easier to do in-house. That being said, Avalara does integrate into Magento for that functionality as well. So it kind of depends on what you're using.
Okay. All right. I have another question here. If a US client buys from a Canadian company, are they subject to Nexus?
To Nexus. So and just to give an example, businesses in Ottawa, and you're selling to a customer in California,
Right.
that customer already has Nexus in California because that's where they're located.
Okay.
And so, yes, they do. The short answer is yes, but you're not held responsible for their obligations. You're only held responsible for yours. And
So,
so from
okay.
the selling business standpoint, if you do cross California's threshold, again, you have to have that obligation first. If you have crossed that threshold, you would then either need to provide a sales tax, you'd need to collect sales tax and remit that to California, or collect an exemption certificate from that customer and have that on file as well as send a report to California of that sale.
Okay. And so, I mean, part of that from if the selling company is here in Canada somewhere and they have Sage 300 and they're selling using, the order entry module and they have AvaTax, that will automatically charge the correct tax. Is that right?
Yeah, that is correct. That's where Avalara would be able to assist, is both getting that accurate sales tax determination or validating and keeping an exemption certificate on file.
Right. Okay. So, I mean, we didn't talk a whole lot. This section was more just general information, but maybe you want to just talk a little bit about Avalara and Sage 300 and how it works. Is that okay?
Yeah, that just to lightly touch on, again, one of the key pieces I wanted to focus on here today was just you guys getting 5 things to double check your business, and if a further
Yeah.
conversation is required, great. And then really the start of any of our conversations would begin with where do you have obligations? What are the goal? What do you need to account for when it comes to compliance? If it's cross-border compliance and sales tax, fantastic. Let's dive into those conversations.
Right.
Where Avalara is able to really help is that we do, as a Sage certified partner, we have built out and maintain an integration into Sage 300 so that you are able to offload any of the sales tax maintenance processes to Avalara, and we're able to, in real time, provide all of the necessary sales tax compliance information within Sage. And so all of that is guaranteed. All that information is guaranteed by Avalara. We keep up to date with it, and we take that mundane day-to-day effort off of your guys' plate, and you're then able to simply focus on where you need to be registered and what compliance you need to account for. Once a new obligation arises, you let Avalara know, and we're then able to just step in and maintain it on an ongoing basis.
Okay. And as a follow-up to that last question, what if there's no physical product, the client being shipped to the US? So I guess it's either online or a good and a service.
Yeah, that would. Yeah,
Shipping.
in that scenario, so software is the easy example, but I would love to have a little bit more detailed conversation if needed with somebody. So if it's software, effectively the bill to address that you're selling to, or if you are selling to a business and they are detailing where the point of use is for that software, that would count as your ship to. And so it is still subject to that to the revenue threshold as well as the shipment thresholds that states are enforcing.
And the same if you were selling your company's capabilities, right? Services.
That gets a little bit trickier, so that's why I'd like to jump into a conversation. If somebody does have whether it be engineering services or professional services, that would be on a state by state basis. So we just need to get a little bit clearer picture before giving a blanket answer.
Well, that's a muddy answer because each state has different rules.
Yeah. Yep.
Okay. Well, that's very good. And again, if anybody does want to have a product demonstration of the AvaTax product and how it works in Sage 300, Kevin, just reach out to me and Kevin and I can set that up. It's very easy to kind of show that how it works through Sage 300, and the implementation of the product is how Avalara can when Kevin said that they can take all the burden off of you and make sure that you comply. Part of that setup is validating addresses of clients in the US, because as they've showed me before in their demonstrations, you could have 4 corners of a street or 2 streets in a jurisdiction and potentially have different taxes on each corner of that street for that same product to 4 different businesses, right, Kevin? So it can get very complex, but your systems have the ability to validate the address down to a very detailed level so that when you're selling to this company, it's exactly in this location and what tax affects it, or if in fact there's a tax holiday for whatever reason on that day, that month, or on that product. correct?
Yep, exactly.
Yeah, so it can be complex, but if you have to deal with this, AvaTax can help with a lot of that if you are selling into the US. So very good, very good questions. We're about at the time we suggested. If anybody else has a question, I'll open it up here. Please just put it in the Q&A. Again, we are recording the session, and you'll see it within the next day. You'll get an email with the recording. Kevin, I'm gonna just take control over again. I don't think there's anything else to show, correct?
Yep.
I'm just going to make myself the presenter, and I'm going to show my my info here. And I'm just going to start so you can see my screen now, I think, eh? I think, hopefully.
Yep.
Can you see my screen? I had a little bit of a delay there. So as I mentioned, the one last thing, our next Lunch and Learn is on April 21st. It's about a product called Credit Hound by Dracer for doing collections and managing credit calls and that sort of thing in your Sage 300. So please go to our website and you can join that one too. And I do want to say thank you, Kevin, for setting this up. It's, like I said, we were getting a lot of questions recently from some of our clients that are dealing into the US. And I think this provides a great overview of what they need to be thinking about. And, Mike and Michelle and I are happy to have a discussion about you, to bring Kevin in. Please reach out to us, give us a call, send an email to sales@da.ca, and we'll respond. I want to thank everybody for their time today, and please stay safe. And we'll be in touch. All right. Thanks, Kevin.
Thank you.
All right. Have a good day, all. Stay safe.